the end of last week, we saw what many market watchers labelled appalling year-end results out of Costain, West Africa. The numbers showing a bottom-line decline of 274%, despite a 65% increase in turnover during the period. And to talk us through the numbers, but more importantly, prospects moving forward for the company, Ploeger, Executive Director of Finance at Costain, joins us now live from our studios in Lagos. Thanks so much for joining us this afternoon. Well, the results falling short of analysts' projections of 0.4 billion naira, as well as your own projections of 0.5 and 1.9 billion for the full year of 2008 and 2009, respectively. Run us through the pressure points, seeing the strong divergence from initial forecasts.
Well, at the side of the turnover, we have made our forecasts, and we are making good to our promises there. The issue is that we are faced with a market that is not really friendly to us at the moment, because a number of our clients, due to some recent reforms in the banking sector in Nigeria, are short of cash, and we have made provisions which have caused our numbers to dramatically drop from a profit to a loss position.
Well, if we look at it, it's largely being attributed then to non-performing loans, if we can call it that. I mean, what rate of recovery are you anticipating moving forward? Because we see that you've made 100% provision for doubtful debt.
Yes, in our books we have provided for well over 700 million naira of debt. So in actual fact, from operations we had 100 million naira worth of profits, which is lower than forecast, but still it is much better than we are having now. In the meantime, we've seen some recovery of those loans, minor amounts of money, but anything that we will recover is immediately profit in future periods. We have also turned around in the first quarter of this year. We will be showing a significant profit over the first quarter of the new year that we've just entered.
Has this changed your credit facility criteria at all, the experience that you've had in 2009, where risk mitigating strategies clearly have to be front of mind?
Yes, we do investigate our clients before we start work, but something now in Nigeria has happened that had nothing to do with the structure of the clients themselves. It had to do with an overall market ripple effect. We are living through that. I'm sure that many of our clients will find the money again in future periods, and they will be able to pay us what they owe us and help us complete the projects that we have partially undertook for them at the moment. As soon as that happens, like I just said, it will immediately create profitability on our side just by getting those payments in.
A lot of your profitability will be dependent on the health of the construction industry, but some saying that the elevated rates of unemployment we're seeing on the back of recent layoffs in the banking industry specifically poses a threat to health of this industry. What's your outlook for the industry at large?
Well, in Nigeria there's a lot of work to do. There's a lot of infrastructural works to do, whether it is roads or railways, in which we have just signed an enormous contract with the Nigerian Railway Corporation. There is works to be done in the water sector, in which we are very strong. Yes, there's a lot of unemployment, but actually that for us is a benefit, because it allows us to attract good people for good rates. So I don't see that as a downturn. I see it as an opportunity for the company.
With that being the case, what kind of order book are you looking at for 2010 and heading into next year as well?
Currently signed up, we have a $200 million forward-looking order book, which is quite rapidly expanding at the moment. We are talking to yet another number of clients with which we hope to sign off new contracts in the first quarter, which would hopefully take our order book to somewhere around the $350 million looking forward.